Federal Reserve and the Bank of Japan will be the main macro focus in the week ahead, with Wednesday the 21st of September being the main day on traders' minds. Now, the Bank of Japan will deliver its policy verdict after weeks of speculation on how to stop the yen from appreciating and how to get Japanese households to spend. The market expects the Bank of Japan to add more aggressive monetary stimulus in order to boost the economic growth and inflation in Japan. Now, expectations are very high, yet ironically, no one really knows what to expect. According to the Wall Street Journal, Japan's central bank is split over its easing program. Some on the Bank of Japan's board think its extensive bond buying needs to be more flexible, adding uncertainty to a radical experiment in monetary stimulus, while many think that a further rate cut would be inappropriate given that deeper negative rates in a country where saving to consumption ratio is historically high and has not given the expected result. In an environment where expectations are high yet unclear, two-sided volatility should be on the menu for the yen. In the UK, the Bank of England's quarterly report will be in focus. Now, the Bank of England's projections, commentaries on market developments and monetary policy operations will all be on the menu. At September's monetary policy meeting, the Bank of England maintained the status quo, while the accompanying statement revealed that most of the members are still in favour of an additional rate cut this year in order to counterbalance post-Brexit impacts. Now, the pound held its ground as the market refrained from fully integrating another rate cut into their plans this year. We remind that this report tends to see limited market reaction as parts of this report have already been released, yet Brexit could once again creep in the headlines in various forms. Unless we see an unexpected negative surprise, the midterm recovery in the pound market could push cable towards $1.3445 or $1.35 before reaching $1.3640, which is the major 38.2% retracement on the post-Brexit sell-off. In the short term, however, the US dollar leg could prevail. In this perspective, midterm traders could see dip buying opportunities should the US dollar strengthen on the back of the Fed. Later on Wednesday, it will be the Fed's turn to announce its monetary policy decision. Now, speculations regarding the Fed's September meeting have been quite volatile over the past weeks. At the beginning of the year, the Fed was expected to hike rates by just a 1% chance, which would be in 4 meetings. We are now in September, no rate hike has happened yet, and now expectations for a single rate hike before the end of the year have tanked below 50% after the most recent US data disappointed. The probability for a Fed rate hike next week, Wednesday, has fallen to just 18%. This means the market is not ready to absorb a rate hike at next week's meeting. But the accompanying statement will be important as it is expected to hint at the Fed's intentions regarding the future of its policy. The main question is whether or not the Fed could hike rates at least once before the end of this year. So the US and Japan are the major markets to watch next week, but wrapping up the end of the week will be a speech from ECB President Mario Draghi and European manufacturing data, so the euro will also be one to watch on Thursday and Friday also. That's all for now for the week ahead, but join us next week. Goodbye.